So, guys, thank you so much for coming on to Startup Steroid and sharing your story with us today. I'm really excited to learn about how you guys are sort of looking at commercial real estate and really opening that market up to everyday investors, which is a really exciting thing. But before we get into all of the specifics of the company and of what you are achieving, let's start with a quick introduction. Matt, why don't I come to you first? Tell me a little bit about your background and how you sort of came into this world.
Sure. Thank you, Deval. Thanks very much for having us. So we're super excited to be here today. My background is commercial real estate, management consulting, and technology. I obviously have this slightly funky accent. And I'm from the UK, but I've been in the US 10, 11 years now. And in the UK, I did a lot of large-scale management consulting around, like I said, technology, finance space. And then I've been in the US in the last 10 years, I've really been very, very involved in large-scale commercial real estate, being that repositioning, purchasing, repositioning, and/or ground-up financing of typically hospitality, multifamily, and a plethora, really, of other real estate. And I also very involved in foreign investment, so money just coming into the United States directly.
Perfect. So we'll certainly dig into more of that real estate background as we go through the story. But Parker, why don't I come to you next? Tell me a little bit about your background and how you got it started in this business.
Yeah, absolutely. So I've been in commercial real estate in some form or another for the last about 5 to 7 years. My background is in finance and law. I'm an attorney by trade. Have worked in foreign direct investment and syndicating deals, putting deals together, like I said, for the past 5 to 7 years in some capacity or another. And been an investor myself. I started investing about that time as well. And so really passionate about the commercial real estate space.
Fantastic. So you guys both have good backgrounds in commercial real estate. You obviously understand that investment world. What was the idea behind starting this company? What was the initial vision? Matt, I'll come to you first. Yeah.
Frustration, to be perfectly frank.
Yeah.
We got frustrated because we had a lot of clients that were doing large scale, whether it was ground up or purchasing and repositioning commercial real estate. Let's talk about multifamily specifically. And it was a frustration that because we knew them and we had a relationship, and we could get involved personally, or we could bring in people we know and refer them. But we started to realize there's some massive barriers to entry there. One is we are fortunate that we knew these people. If we didn't, then you'd never know about some of these deals that are happening. And let's not beat around the bush. I mean, some of these commercial real estate deals are incredible. There's a lot of ways to make money in the world, and certainly commercial real estate is a very strong way to do it, especially when you're looking at these kind of acquisition of multifamily that they're leased up. There's a lot of tenants already in them. You just need to reposition them. It's an amazing opportunity, but you need to know the folks. You need to trust them. But more than anything, you need a lot of money. So even if you're coming in as kind of the equity investor, let's call it, we were seeing that you need to drop down 50, 100, 150, 250 sometimes at a time. And that money would be locked up for 5 years, 3 to 5 years, because typically these business plans on these assets are 3 to 5 years. And then not only that, most of the time, 99.9% of the time, a lot of the securities exemptions or the securities regulations basically didn't allow, you had to be an accredited investor. So for the vast majority of folks out there walking the streets, working really hard, trying to make a livelihood for themselves, they don't even if they knew about these potential opportunities, they just can't get involved in them. So that was the frustration that we looked at, and we said, how can we open the doors to these types of opportunities in compliant, secure way? And that's really where we began to look at CalTier. And then I'll just finish that up. The other piece, as Parker alluded to, we were very involved in foreign investment too. And we said, how on earth would we allow international money to flow into some of these assets? And so that's where it kind of started. That's where we began the questioning and like the planning of how we actually can do this.
Fantastic. Parker, why don't I ask you the same question? And maybe this time you can also add why you guys chose the multifamily route and not the other asset class in commercial real estate.
Yeah, absolutely. And Matt hit it right on the head. I mean, it was out of frustration, both personally and professionally, seeing clients wanting to get involved in real estate and not having a direct access to some of the better opportunities. And as Matt said, some of those better opportunities were what we saw just for our experience from dealing with different asset classes and different types of real estate was multifamily acquisition and the value add opportunities that they present. Um, a lot of personally, as an attorney, a lot of my clients were wanting to invest in something that was cash flowing, that was that produced steady stream of income, but also had the upside as well. And that's really where we saw the benefit from multifamily value add opportunities, where they, as Matt said, they're already leased up. They're producing rental income. We can go in, we can lift the rents by doing some renovations, some light renovations, sometimes more in-depth renovations, and then increasing the value at the same time. And so that's really what we want to do, is open the door. If we're feeling that frustration, we know that others are feeling that frustration. So we wanted to open the door to the average investor or the mid-market investor that really can't get their hands on those premier opportunities.
Got it. And Matt, just for clarification on the asset class, you are going into existing multifamily projects and not ground up developments, right?
Yeah, Deval, that's correct. So I have a fair amount of experience with multi-million dollar actually ground up developments as a consultant or a service provider on the financing side. So I understand the risks associated with that. I also understand the upside that can be there.
Yes.
But when you're providing a platform to, as Pog said, the mid-market, the everyday investor, the people on the street, you got to be cognizant and respectful of the risk factor too. So multifamily for us, when we're looking at it, it's cash flowing. Like Pog said, it's cash flowing already. We fractionally invest into those assets, so we reduce some risk down there. And if you look at, CBRE talk about that there's several million shortfall of new build multifamily. So not just going in and repurposing existing. We're talking about, this is Freddie Mac just came out recently, last week I think, and said just in 2021 they're projecting a $300 billion plus of multifamily specifically acquisitions this year. And that's because there is a huge demand for it. It's going to grow, we believe. We believe it's a really strong asset class. We'll probably get into this a little bit more. We're starting with multifamily real estate because we know it, because it's a low-hanging fruit for us, because we really like it. But our platform can spread into lots of other things. It's just, this is where we want to begin because we know it and we have access to it.
Yeah, no, and the asset class is fantastic, right? You guys, I know, started back in 2017, but the cap rates since have improved tremendously in multifamily.
Yeah.
And not just that, during COVID, office, retail, all the other asset classes took giant hits, whereas in multifamily has been relatively stable. So let's talk a little bit about that. Let's talk about what, the progression since you guys started and how the company is sort of evolved, what kind of milestones you guys have had.
Maybe I'll start, Park, and let you finish. I mean, so the company has been going for a few years, but we really started out with kind of that traditional syndicating accredited investors and placing them into deals. But we always had an eye to, we want to create this fund mechanism. It's just with Regulation A, which is what we're using, A plus. You don't do that in two weeks with the SEC. It takes a while. So we went about that. We also raised a bunch of money to do that, to put our technology and our platform and our compliance, and also register the fund with the SEC. So while we were waiting for that, we were working on placing investors into other deals. And now, we really feel like our kickoff was really, last year we were running the fund, but COVID was it wasn't the best. it wouldn't necessarily be the best time to kick off a fund in the middle of COVID. So we kind of did a soft launch, and then this year is really where we've launched. And right now we're seeing massive growth through the platform and investors and investments. So as we really feel like this is our first, as we call it, our proper first year of operating the fund, and our KPIs are fantastic. Our data points are incredible right now, so it's exciting. Maybe I'll hand over to Parker and let him talk a bit more about where we're headed.
Absolutely. And Parker, a little bit more specific information about your team, about the platform, and how many people you have. That would be amazing as well.
Yeah, no, absolutely. So as Matt said, we like to consider even just since April, right? So since April, we launched our new platform. We had a live platform before, but just since April, we're seeing an uptick in investors and users on our platform. I think we're up 400% since April.
Wow, nice.
So it's really nice. And just since then, we've been able to we've invested into 5 different assets since the start of this year. So since January, we have a total of 877 doors that we have under management. And we're growing the fund each and every day. Our goal is, by the end of this year to have, $20-30 million in our first fund. We feel like after the launch of our first fund, we feel like we can launch our second fund, probably maybe by the end of this year, beginning of next year. And so we're growing the company. We're getting more and more users on our platform each and every day. We have, I think about the latest, because it changes every day, I think we have about 1,500 users on our platform. And we have leads, or a mailing list of up to 30,000. So we're really growing and getting those users on the platform, building our AUM and growing the company.
That's fantastic. Yeah, you guys are definitely on the right track and growing very rapidly. So when we talk about the assets, you mentioned that you have 5 assets now. Let's talk a little bit more specifically about what that actually means, because some people might not understand how to sort of break that down. So tell me what the assets are, and then Matt, I'll come to you and ask you some more sort of questions about partnerships and things like that. So Parker, let's get a description of the assets and what that actually looks like for an investor.
Yeah, absolutely. So we have one of the assets is a 352 unit apartment building in the Phoenix area in Glendale, Arizona. So that's a value add, as we discussed before. It's a value add component. So we actually went in with our partner, which Matt will touch on. We went in and renovated those units, have lifted the rents, and that asset is performing quite well. We have 2 assets in Utah, in Provo, Utah. So they're right off campus of Brigham Young University, which is one of the major institutions. I actually coincidentally that's where I went to school, so I know that area very well.
Okay.
And so we have 2 assets there. We have an 88 unit in Houston, Texas, the same kind of thing like the Arizona asset. It's a value add component. So we're in the process of renovating some of those units and lifting rents on that particular asset. And then finally, we're invested in a project in Lawrence, Kansas, which is right outside the University of Kansas. So it's a student housing facility, and that asset as well is performing very well so far. That one's, I think, our latest asset. So it's a month or 2 months old, but right now, so far so good on that asset as well.
Fantastic. So Matt, just for follow-up questions on these assets, these are obviously huge assets. So you're not necessarily taking up the entire investment. Tell me a little bit about how you sort of source the deal, what kind of partners you work with, and then as you sort of go through the investment, how are you partnering with other equity investors and getting into the investment?
It's a great question, and it's a really critical part of our business plan. So it's really important to us that we work with partners that we've vetted, background checked, have a lot of experience. So when people look at us and they say, well, Parker, you have 7 or 10 years experience and I have 8 to 10 years and our other partner has about the same, and we have some advisors on our board that have 30 years experience. It's not just our experience you're looking at, it's actually the partners that we're making the investments into. Now, those folks typically aren't going to allow, they're not going to allow non-accredited investors to come into their deals, just like for the reasons we talked about earlier. But because of us, because we're collating the money and we're managing the fund and we're managing those investors, they're happy for us to come in, which opens the door to some of these sort of opportunities that nobody would ever normally see. So we go through a strict vetting process. We need to know the background. We need to know the success rate of these companies. We obviously we go through the whole due diligence check with them. We're often coming in as a fractional investor in the deal. So they are putting together the debt, the institutional money, and then we're part of the equity side of the raise. We may sit side by side with institutional money, but we're a fractional investor in it. As our fund grows, that ticket price, that check size will grow in size, because we have to manage our fund diligently in terms of a fund management and risk management. So, we're not going to sign off, doesn't matter what size the fund is, if you talk percentages, we're never going to sign off like a 25% of the fund in one check, because that would be foolish, right? That's not how we do it. So if you're an investor coming in, your money is being spread across, right now we've got 5 assets. We've really done that in the last 6 months, I think. And we're aggressively going after more. So your money's going to be spread across that portfolio, and they're all over the place. But we don't need, we're not going to end up with 50 partners. We don't need that. That's too much to handle. And really what we're looking at is a core group of maybe half dozen, maybe 10, where we're investing in them. They know us, we know them, we trust them, because real estate is also very collaborative and trust folk. I mean, you have to have a lot of trust and knowledge and relationship with the groups you're going in with.
Right.
So that's all part of the process that we do, I guess, on behalf of our investors. That's what we're doing as fund managers.
Right. No, that's fantastic. And the fact that you guys are coming in with this much experience and are picking the partners that you have experience with, I think that really is the key of making this work. From an investor perspective, Parker, I'm going to ask you to sort of help me walk through investment, and we can, in broad strokes. So this is not a specific investment. I'm just trying to understand the model that we're using here. But let's say we have a $50 million deal, and X number of doors that we're investing in. Half, let's say 40 to 50% is equity. So let's say about between 20 and 25 equity. How much would you expect to take from that deal, and what are you expecting of those partners that Matt just touched on?
Yeah, that's a great question. So it really, and not to, it's not a cop-out answer by any stretch, but it really depends on a deal-by-deal basis, right? And a partner, in each partner. So I'll give you an example. For example, one of the partners we worked with, especially on the Arizona deal, was a group called Sundance Bay, right? And they do about $10 billion worth of real estate each year. One of their the head of that company actually sits on our advisory council, and named Matt Romney, and he's been a great help to this company. But so for that, for example, it depends on the fund as well. So for example, we as the fund grows, we could write $1 million check for that 20, and then they come up with the rest of the 19. We could do half, we could do half of that, as the fund grows as well. And it depends. Sometimes we sit on the GP side and sometimes the LP side, right? So on the GP side, typically the GP will come in with about 10% of the equity, right? And then the institutional money will come in with the rest, and that's typically how the structure works, and how our fund works is we want to participate on both the GP and the LP side. And as the fund grows, we'll write bigger checks, and we'll take out a bigger piece of that equity.
Got it. So you're coming in as a relatively small minority investor in a much bigger deal, and then that basically lets the partner do majority of the work, manage the actual transaction, and you're more focused on managing your fund and managing the investors part of that deal. So that's fantastic. So now let's talk about what you're trying to achieve. You already mentioned that you're looking for some pretty big milestones by end of the year. What's the, let's say, 12 to 24 month vision for the company? And Matt, I'll come to you first. Parker, I'll come to you next.
Okay. Yeah. So the biggest things we're focusing on, we're always working on user experience, customer experience. Those are just consistent things that we do. We take our clients' feedback very, very seriously. And we have a pretty flat structure here at the company. So there's not like 50 layers where, someone's going to be complaining. And then we hear about things from our support team really quickly. And we deal with it and we react because, we feel like, it's not to get too much into competition, but our competition, that's one of our uniques. And we hear it all the time, is that we were able to talk to you guys and we were able to communicate. So that's always part of the goal. But the big ones are, we want 20 to 30 million in the fund by the end of the year. We want 10,000 investors on our platform. Based on the numbers we're seeing now from April to today, we should hit that. We're opening up the international side of the business, which will be the end of this year, next year. So we would like, 20 to 30,000 investors next year internationally, which is a little more complicated with the compliance and KYC and AML and background checks, but we're experienced in that. So that's one of the bigger goals. We'd like to double our AUM at the very least. And then really the long term, like 2 to 3 year, we're aiming to have 500,000 users at least on our platform as a mix from domestic and international, onboarded, vetted, background check, because that's really a huge part of the value of our company. So those are the big milestone goals in terms of, internally in terms of the company.
Perfect. Yeah, no, that's fantastic. Matt, anything you'd like to, sorry, Matt, Parker, anything you'd like to add to that?
Yeah, no, I think Matt covered the basis there. I think a long-term vision we see, like I think Matt may have mentioned this. We're building a brand. We're building a community. Yep, and so we see not 2 to 3 years, maybe closer to 3 to 5. But we see an opportunity to really monetize that community and that brand by offering other potential other assets, depending on the market at that time, and it's very attractive as far as a M&A or acquisition target of having those users on the platform and being a brand that people can trust. So.
Absolutely. Fantastic. So now the last question, where do you guys hope to go with this company? What's the big vision? 5 years exit, IPO, where are you trying to get to?
We could do either. Our funds individually can actually go public on their own outside of the company. We're in the process of registering as an RIA, registered investment advisor, which means we can offer other securities to our community, which is what Parker was alluding to there. So we're already in discussions with some wealth management groups that basically want to offer services to the community that we're building, the trusted branded community we're building. But I think reality is we're building something that's incredibly purchasable, sellable, because we're going to have real estate AUM, which in and of itself is valuable, but that doesn't necessarily always have like a 10x, 20x, 100x return. What does have is this relationship with domestic and international investors. Just to give you one little kind of piece here, the banking industry value their industry statistics. I think it's a 6-year relationship. So if you're a client of a bank, on average, your value to that bank is about $46,000, right?
Okay.
Through the credit cards, the loans, the money on deposit, whatever you've got.
Right.
So if you think about that from this perspective, if we deliver on even half of what we're trying to achieve here, and we get 50,000 people internationally, these are 50,000 people that don't have any wealth management services in the United States, don't have any financial services in the United States, yet are investing in our fund, which is investing into real estate. So there's accounts that need opening. There's all these financial services that need opening. So
right.
I think we're a massive acquisition target for a financial institution, an insurance institution, and then, of course, a real estate institution. Basically a brand that says we would love that community. You've already built it. It's ready to go. You've got a technology platform. You've got a relationship with investors, and they think they can come in and monetize it, times 100 from what we have.
Right. No, that's fantastic. And Parker, to come back to you, the organization seems like an amazing plan with specific fund, or this is your first fund. Any goals, going 3-5 years out? How many funds you'd like to have, assets, etc.?
Yeah, absolutely. And I think Matt touched on the assets. We're looking to, at the very least, double our AUM by the end of this year. As far as the funds, we're actually in the process of developing our second fund that we'll launch probably, like I said, later this year or early next year. We would like to. We're also in talks with some tax accountants and other groups to help set up a primarily international fund, which would be a $100 million fund that would be where we set up the blocker companies and the tax structures to make it really attractive for these international investors to come into that fund. So I think in 3 to 5 years, we hope to have this is the first of 5 to 6 funds, maybe more.
Could I, sorry to just cut across there.
Yeah.
The other thing I just realized I forgot to mention of ours, the secondary trading market too for our investors. So that's a big part of digitalizing what we're doing. We are in talks with some groups right now that we didn't start off digitalizing because we didn't want that to slow us down, but we're now, figuring out how we're going to digitalize it. And that secondary trading market is massive. So they can trade in and out of our funds, which is huge. So I think probably we're really focused on building the AUM in the community today. 2021 is community. We're getting the core building blocks of the company established. 2022, we're going to look at these pieces where, let's say we've got 2 funds and we hopefully will be, subscribed fully. So that would be 75 million in each one, for example. We will then open up probably that's per year. Yeah. So we'd open up that secondary trading market for those investors. So there's multiple ways where outside of just like real estate AUM where we make money with this thing.
Yep.
Yeah, and I will say this. Oh, sorry. I was just going to say, and I will say that our funds are evergreen, right? So as Matt was saying, so the 75 million we can raise each and every year. So so that's one of the things that the funds. Not only will we have multiple funds, those funds will keep bringing in more investors and have more AUM under each fund.
Fantastic. No, I think you guys are on the right track, like I said before, but you guys are doing something really amazing. So I'm really excited for you. For the investors that are watching, we have the profile, pitch deck, all of the specific information on Startup Steroid. So feel free to check that out there. And if you do want to get in touch with either Matt or Parker or both, let us know or just comment, and we'll make sure you guys get connected, and you can continue the conversation from there. So guys, thank you so much for coming on to Startup Steroid again. I really appreciate your time and what you're trying to do, and best of luck for the future.
Thank you.
Thank you, Naval. Really appreciate it.
All right.